I don't see you, Chris. We can't start the show without you. We need
Am I
you.
not here?
You're not here.
There I go.
Yeah.
Everyone
Four.
can see.
Okay.
Doing the Bob Dylan thing.
All right. Good morning, everyone. Welcome to IBD Live, where we help you make more money in the stock market every day. I'm Chris Gessel, head of the IBD content department. And with me today are my good friends and colleagues, kicking off with Mike Webster, our head market strategist. Morning, Mike.
Hey.
Ken Shreve, heading the news, also senior market writer and key person within Leaderboard, and deputy markets editor David Chung, also a big contributor to Leaderboard and a great golfer. So,
thank you, Chris.
Golf is. I'm getting excited. You know, the days are getting longer. We all.
It is nearing the time.
We will play golf after work, and so that's the surest sign of spring.
That's right. I might have to start back up. It's been like 20 years, but you know.
Awesome.
Or maybe 15.
It'll give you another thing to obsess over, okay?
Don't kid me. I'm not obsessive at all.
I know.
Very mellow, even-keeled type of dude.
That's right.
Then, behind me, the dark ops is Justin Nielsen, head of market research. He'll be answering the bulk of the questions, but we'll all be jumping in and looking at his things proceed. So let's kick it off. And Mike, what's looking good to you this morning?
You know, DT came out with earnings. It's gapping up, so we'll take a look at that one. Looks pretty powerful.
All right. Dave.
Hey, Chris, good morning. I got to also tell the crowd that you are quite a golfer yourself. So let's and Ken as well. We're working on an IBD team. We're going to challenge the Marcus Smith team, right? So they're going to have a little match play with us someday. But good morning, everyone. I'm going to look at Cirrus Logic, CRUS. That's a chip making company, very closely linked to Apple. They have earnings after the close, I believe, tomorrow, and then. The second stock will be Team Atlassian. It had a recent breakout and it's just above the 5% buy zone from a 140.59 buy point. Both of those stocks have very interesting chart action. I'm back to them.
Behind me, Buzzkill Justin reminded me that I had to do the disclaimer. So let me do that before we pass it on.
Well, we do want to stay on the air.
Everything was going so swimmingly. As we note every morning, IBD Live is for informational and educational purposes only. Please do your own research before making any trades. We're not offering buy or sell recommendations. So with that, let's hand it off to Ken. What's happening after it really seems like the correction that was hurting us Friday and Monday seems to be done, but what's happening in the world of news?
Well, where to begin? Good morning, everyone. Yeah, it was a pretty impressive performance for the stock market yesterday. Nice day of outperformance for the NASDAQ. Had a nice bounce back for the Philadelphia Semiconductor Index after a drop of more than 3% on Monday. It bounced back 2.4% on Tuesday. So looks like stocks are poised to open higher again. Dow futures leading the way, up 0.6%, thanks to strong performances from Dow Incorporated, Apple, as well as Boeing. We have NASDAQ futures, NASDAQ 100 futures up 0.5%, and S&P 500 futures up 0.4%. Mentioned, strong earnings report from Apple. I think Ed Carson in his overnight futures column called it a Picasso-like report.
Yeah, I saw that.
Oh, wow.
Yeah. Oh, from Wedbush. Okay. Well, I'm sure he attributed that to Wedbush, but so iPhone revenue, $56 billion. That was well ahead of expectations. And, the knock on Apple recently is, sort of waning iPhone sales and, services revenue starting to do better, wearables revenue. But the iPhone sales were really well above expectations. iPhone 11 sales doing particularly well. Services revenue, $12.7 billion. I think that was a little below expectations, but investors still optimistic about $10 billion in wearables revenue. That continues to grow nicely. So Apple poised to open.
Wearables bigger than Mac yesterday? Did I have that right?
Yeah.
Wow.
Yeah.
That's pretty Who would have thought that, a couple of years back when the watch came out?
Exactly. So so it looks like wearables still doing very well at Apple, and again a little miss on services revenue, but stock is up 2% in pre-market trading. We also heard from Boeing in the Dow. It was very interesting. I was watching futures this morning. Dow futures were up well over 100 points, and then Boeing came out with earnings. There was an initial knee-jerk reaction to a $4 billion revenue miss, and Dow futures pared their gains significantly. And then all of a sudden, Boeing turned sharply higher. And that stock is, poised to open higher on earnings. Lots of charges in that report. Moving on, we've got the two-day Fed meeting that concludes today. We've been talking about a big precipitous drop in the 10-year Treasury yield since late December, when it was up around 1.94%. Just checked it before we went on the air, and it was trading around 1.62%. I think the Fed is still expected to stand pat on interest rates this year, although this outbreak of the coronavirus and its possible impact on financial markets and global growth, people are saying it's not out of the realm of possibility that we could see another rate cut this year, but that really just depends on how this coronavirus outbreak resolves itself. Other earnings reports in the news today: Starbucks, eBay, AMD, all down on earnings. Starbucks is actually said they're going to launch a plant-based breakfast sandwich this year. Stock really wasn't moving much in pre-market trading, closed right at its 50-day moving average yesterday. Different story at eBay and AMD. eBay has been a laggard in the technology sector. They gave pretty soft Q1 revenue guidance, citing competition from the usual suspects: Walmart, Amazon.com. Big disappointment in the pre-market trading is Advanced Micro Devices. Nice earnings and sales beat. Their Q1 revenue guidance was a bit soft, citing soft console demand. This stock could be poised for a test of the 10-week moving average. At last check, it was trading around 48 thereabouts, a little over 48 in pre-market trading. The 10-week moving average is around 46. So AMD has certainly established itself as one of the big leaders in the chip sector. So we'll see if it does test the 10-week moving average. We'll see what that test looks like. Dynatrace. We've been talking a lot about Dynatrace in recent shows. A new issue. Of course, we heard from Team Atlassian earlier this week. Big player in digital transformation, companies modernizing and automating their IT operations. Dynatrace is right in the middle of this field. Really solid numbers from Dynatrace. That stock is up sharply.
When I mentioned it a couple of minutes ago, it was up 5%. Now it's up 9%.
Yeah. So this one
really
looks poised for a breakaway gap.
Almost 10.
It closed right at the top of the 5% buy zone from a 27.29 entry Tuesday. We'll talk about this after the market opens and discuss if it is actionable. Beyond Meat, interesting pre-market session for Beyond Meat. It was down on news that Canadian restaurant firm Tim Hortons is removing the company's plant-based sandwiches from stores in Canada, but then shares turned higher on news that Beyond Meat is expanding a partnership with Kentucky Fried Chicken, chicken nuggets. So at last check, that was like I said, had turned higher. Also, got to give credit.
Price point for both places, restaurants are about the same. KFC and Tim Hortons, right?
I think so. Yeah.
That was a joke. Sorry.
Sorry. When Mike and I got in earlier this morning, he said, "Hey, GE, wow, GE up 8% or so on earnings," and I was like, "Oh, okay, whatever." But then I looked at GE's chart, and this stock actually looks actionable to me. It was a breakout from a bottoming base. So, I mean, listen, technical traders may want to look at this stock. Listen, Chris just rolled his eyes. I get it.
If you would have told me like 2 years ago, GE, a buddy of mine, old colleague, did say that to me, and I'd give him a hard time for over a year for bringing up GE.
That's right.
But it's a little bit different now.
Yeah, well, so listen, Mike brought up GE. I kind of scoffed at. I looked at the chart and I said, "Hey, this doesn't look too bad." Relative strength rating of 88 too. So
it's worth some discussion about that 10-week line and the 40-week line.
All right, we'll see if we can push that by Chris. All right, we're wrapping up here. Match Group, real quick. CEO Mandy Ginsberg is stepping down. We've been talking about Match Group building the right side of a base. Mandy Ginsberg is stepping down due to personal challenges. We'll see how that stock opens up, and then earnings after the close today. Very busy. PayPal, leaderboard stock ServiceNow, leaderboard stock Tesla. We also have Facebook, Microsoft, and 2 Apple suppliers, Cirrus and Qorvo. That's it, Chris.
All right, thank you. Lots of stuff going on, and the market's open. The Nasdaq up 0.55, S&P 0.47. Small caps lagging a bit, and the Dow is the big winner this morning. Okay, just before we start diving into stocks, we'll note. Let me take this one line off. It doesn't really need to be in there. That we were pushing the top of this upper channel line and then reversed off of it, got support here, and now we're moving back. So really, there was a question about how could we be moving back into the market already, and part of it was because we came down and then yesterday closed above that the high of the low day. So that's a sign that at least for now we're back.
You have to be flexible, and it came down exactly to where we would have thought worst case scenario. It just did it right away. Like instead of taking 2 or 3 days to get down there, it happened in 1 day. So you just have to be flexible and be in line with the market. And right now, it's probably going to be between the the high of Friday and the low of Monday for a little bit.
So Dynatrace is looking pretty good. I've got it up on a 1-minute bar. It opened kind of restrained. Is Dynatrace on the NYSE or NASDAQ?
I believe it's
on the NYSE.
Yeah.
It is on the NYSE.
Okay, well,
but it is part of one of the best industry groups, enterprise software.
I'm not holding that against it. It's just that NYSE stocks tend to open up differently because they
good point.
takes a while. So anyhow, the second bar looks great. The third bar is moving higher, and if we go to a 5-minute chart, wow, it is up a lot, 14%. I got to say.
You have a position in it.
I have a position, but it's a small position.
Congratulations.
Still a position. That's great. Yeah, absolutely. Hope,
if you don't want it, journal it over to me because,
All right. I'll see about that.
Good job.
And one of the reasons that I was reluctant to go heavy on this, well, one, because earnings were coming up. And the other thing is because there's such a big difference. What were you calling us? We were, if we go to
squirreling.
Yeah, no. A sliver.
The sliver offering.
The sliver offering. So there's 280 million shares outstanding and 78.6 million in the float, and so that just makes me nervous that like some other stocks that we've seen over the years, where they come public and then every 2 weeks or so, and there's another.
Michael Kors was like the poster child for that.
Yeah, exactly.
Right.
Exactly.
But why don't you explain to people what a float is, because they might not know it.
Well, the float are the shares that are publicly available for trading, and then the balance of shares outstanding are the closely held shares that cannot be. They have to go through the I guess. They have certain periods during the quarter where insiders can sell. I'm not so sure how it works for outside investors like the private equity, but anyhow, there's a lot of shares out there.
Yeah.
Chris, you also mentioned that the 6-month lockup of the IPO is pretty much expiring too. So
that expired
often
yesterday.
Often you find those offerings on the same day as earnings.
Right. And that was interesting because not only there was no offering yesterday, and I am not. We'll see. A lot of times, companies will announce the offering a day after earnings.
Crocs did that recently. Remember that?
Right.
Maybe pull up Crocs just to show that as a warning.
So it may
you see that big 23% on there, and then the very next day it had the offering.
Yeah, there it is.
Yep.
Secondary offering.
That's right.
Thanks, guys.
Right. and then
exactly.
Primary, secondary, or proposed. I'm sorry. So yeah, they announced it the day after earnings, and then it hit the stock the next day.
So what are you doing with your Dynatrace now? Are you adding to it? Or are you just sitting with it?
I'm just going to sit with it for now.
Yeah, I'm just going to watch it myself because it's so far up there and it's such a squirrely stock that I'm just going to watch it too. I'd like to have a piece now that earnings are behind us, but look at this already coming in
again. I would rather. I mean, let's say that this had a sizable short float. It wasn't quite as squirrely, and we didn't have the sphere of the secondary offerings out there. I would definitely be adding, not now, but maybe earlier at the open when it was looking good.
So, hey, could I use a football analogy to describe the fundamentals or the quarterly report, guys?
Sure.
It looked like they really passed a touchdown here. 10 cents a share in earnings, which looks like it was one of the best in 2 years. The estimate was 7 cents, so they just blew out that consensus estimate. The third quarter in a row of 25% or greater sales growth, and then really excellent net margin. In fact, according to our Wanda database, William O'Neill and Company, the 18.5% net margin, after-tax margin, was the best in history.
Yeah.
Okay.
And that's a big deal. That's a big deal.
We get the Super Bowl coming up, Sunday. I figured, why don't we mix in a few football metaphors there? Ken, would you agree? It's a good report.
Who threw this at me?
Ken was handling the news today, so
okay.
Yeah.
If you saw anything else on that.
I'm being told by someone who's always right, LITE and CRUS.
Okay. Yeah, I was going to say, I was looking at the questions as Ken was given the news, and there's a lot of stocks people want to look at and questions. So let's get moving on all these and keep it moving. So yeah, Cirrus. Now Cirrus reports after the close. Is that correct?
They do. Yeah, it is Wednesday.
Looking nice.
Same day. Let's see. Well, what I thought this was interesting because Mike and Justin had originally put it on the ready list, and then it got moved to the watch list. But I think we're thinking about adding it back to the ready list.
We put it back. That was Chris's idea.
Okay. Yeah. And what's interesting is that chart is just showing amazing strength after the breakout from that base on base or that flat base. First real touch of the 10-week moving average this week. But with the earnings coming up, that's always something that I would worry about. I worry a lot about stocks that rise on rumor and then fall on news. So is the big quarterly growth already priced in? That's something you have to be mindful of.
Yeah, because they've had they've already had 3 big earnings reports.
Classic turnaround story here, and cyclical, right? We've talked a lot about that chip sector.
The spread is pretty wide on these options. It's early. Sometimes the spread narrows. So I would look at that a little later. But assuming you could get in, I don't know, like around 350 or something like that, that's going to be a pricey option.
Did you write about the Cirrus in your earnings preview story, Ken?
I spent most of the time on PayPal.
Oh, PayPal. Okay.
PayPal is looking very good.
Yeah,
I think.
Yeah. So PayPal's after the close today as well. So that was a pretty reasonably priced option trade. But at least with Cirrus, which Chris was just looking at, the fact that it's just a really good solid test of the 10-week moving average right now. I mean, it puts it in as a candidate for a call option trade. Right. But again, you just have to assess the strike prices, the premium, and just see how much you have to ante up here.
That light that was on the sheet as well is looking pretty interesting. It's going to bounce off the 10-week.
Yeah, Ed brought this one up. This is another Apple supplier, and this is actually yet another solid first test of the 10-week moving average. Now with Lumentum, they have earnings next week, February 4th. Next week's going to be very busy in terms of earnings as well. So Lumentum reports next week. Good solid test here.
Okay. We'll have to take so something like that. If earnings are within the week, I would, if I'm going to buy something ahead of earnings, I'd probably use an option. So again, the typical thing is get as much time as you can. You don't have to just go for the nearest weekly option, but ideally we like to look for things that are maybe less than 4% as the premium as a percentage of the overall stock price, because the premium is your ultimate loss. If the thing doesn't work, that's the most you can lose, and so you want to understand how much your loss is in relation to the price of the stock. And so that anytime we buy a stock and it goes against us, and we can cut the loss at 4%, that's not too bad, especially if it's on a quarter position or a half position or a quarter position. So that's kind of the idea. And we know that given the way that the volatility works around earnings, these are not great option trades. They're really stock trades. The whole idea is to take control of the shares. And so when you see something, early on in its run where, things are going good and you would expect if it works, it's going to gap up, that's where options really come into play and can be a big...
Can we take a look at TPX?
Sure.
We should, absolutely.
It's just ripping out of there. And
nice.
That's nice to see after 3 months of
sleeping.
It tried to wear us out, just like Costco did.
Yeah. Well, what I think is great about this is we just took a page out of Bill's book, literally, with this. When we were under pressure, we reduced it on leaderboard to a quarter of a position from the half. And because it was looking bad, and then when it switched and then all of a sudden went and had an positive outside day, we just put it back, and then it was swing trader too. So it's just, you have to be flexible, and don't be afraid to buy something back if you just sold it, and even if you took a loss.
I mean, I really like the price action the prior 2 days, assuming this holds up. The one thing that bothers me is this was going sideways when everything else was going up. And so that's why the RS line is lagging. Although if you look at it, I don't know if this area, if that would have been, this is long enough to be a flat base. So if you look at that base within a base, it broke through.
And we all have positions, and I have a position.
Yeah, I do too.
You have a position in it. And
right. So, I'm probably going to take a position right now. I mean, I like the fact that's in the 5% buy zone. And Chris, you mentioned that blue strip shows where it's buyable, price wise. Yeah. The RS line still got a ways to go, but we've discussed how some of these take a little more time because they've been basing.
There's another one breaking out, Tandem. I have a small position in this one. Now we've been trading pod and DXCM, but because this one keeps on breaking out and failing, so I bought a little yesterday because it was kind of a setup day. But what do you guys think about this one? I know you probably hate the RS.
I hate the RS, but I do like the fact that it's a true first stage base, because it's been consolidating for a year, and tried to break out, went sideways, and then undercut that base. So technically, that's we got a new reset 2 ways, both technical and in time. So that's
the other point we made about Tandem was that the 2 big leaders in the group have already established themselves. Dexcom, which is on leaderboard, and also Insulet, which is ticker PODD. So those have been showing the best relative strength among these diabetes firms. But Mike's right, Tandem is kind of creeping over a buy point today.
I agree with Ken, and I'm glad that Mike brought it up. I just think that Tandem is a little more volatile. I think you got to be more among a batch of volatile stocks, a little more volatile, right? And so just be very wary of snapbacks back to buy points.
Yeah, but it's had the ability to make a humongous move. So
that's for sure. That RS line looks much healthier on the weekly chart too. Oh, that's Insulet, but let's see what Tandem's.
Okay, so let's look at some tickers that people were asking about. NVCR was one. So I forgot who asked, but he or she was saying that it's down 5% from the buy point, and actually it's probably down a little bit more than that, but from the early buy point in here.
I mean, this one's pretty straightforward. They're just going to see how it reacts around the 50-day moving average. Obviously, it's been disappointing price action, 4 straight sharp declines. It tried to rally yesterday, really couldn't do much, but it's holding the 50-day. A decisive break here. Obviously, this is going to be kept on a very tight leash on leaderboard.
Yeah, and I have a position. I've backed away from it. I have had and have high hopes for it, but I'm also flexible with it. And it hasn't been acting as strong as some of the other ones, especially yesterday. So we'll see how it. I'm not going to give it too much more.
Yeah. When it did go through the conventional buy point, I laid off of adding any more shares just because the RS line wasn't as powerful. But I do love the story.
Destroying cancer is kind of good.
Destroying cancer with essentially electricity.
Yeah.
And they're expected to turn profitable this year, and I believe. I mean, one of the reasons we really got excited is because there's some top-notch funds in there that we follow. Yeah, T Rowe. Let me do that again.
Yeah, Wells Fargo Growth, T Rowe New Horizon, America Fund, Renaissance Tech, Invesco, Oppenheimer, Discovery, lots of good ones.
That really plays in that when we see something setting up, and then we see that funds that we know about, respect, and have seen their outperformance for many years are in it, then that gives you.
And do you want to draw the downtrend in the handle of the cup with handle? So this is an interesting base because you've got buy points all over the place. So you've got a larger cup with handle that we can see on the weekly, which we can go over after this. And then in the handle is a double bottom where 90 is your buy point, but where we were buying it was with that downtrend there. So that's your first buy. Then your second buy is at 90. And then I wasn't adding too much at the 96.14 just because it was feeling a bit extended.
All right. Let's actually, while we're on the medical, there was a question about biotech ETFs. So we'll run through them. And actually, ETFs are a good way to play biotechs because the individual company risk can be so great. There's a lot of times when they're not profitable, it's all about FDA announcements and things like that. So if we start off with the unleveraged, and this one IBB is, I think it has a lot of the big caps in there, or heavily weighted, because it definitely trades a little different than some others that we're looking at. But
so you got Amgen at 8%, Gilead at 7%, VRTX at 6%, Biogen at 6%, Illumina at 5%, to give you an idea.
So this is always this can make a big move, and during 2012 to 2015, I mean, this was just easy to sit back and play that big move in the big tech. So that's
a great point, Chris. Because remember on leaderboard we had Celgene as one of our big winners in 2013, and they were a big driver. They're one of the best. So Regeneron too. Ken, remember Regeneron was also a big winner in that 3 or 4 year phase.
Right. Yeah. So then there's BIB, which is twice. It's the double version of IBB. So it looks the same, but overall, but you're going to get a lot more action. So yeah, this went up almost tenfold during that period.
Wowza.
Yeah. And then a newer one called LabU hasn't had the the nice uptrend to make that chart look so beautiful, but it's
volatility wise. I mean, the components are very different, aren't they? Mike, do you know much about LabU?
Let me take a look and see. I don't think I have that handy, but let me. No, they're not. For the triples, we don't have them handy.
Okay.
Only for the individuals. Sorry.
It has a a different look to it right now. And again, for shorter term trades, this can be a lot of fun if it works, and if not, it can
triple your unfun.
Yeah, but in some ways, if there is a big sector move, a double ETF is pretty good. So Ed has just reminded me to take a look at the market, and looks like we're fading a bit.
Not too bad.
Not bad. 0.3% to 0.4% across the key indexes.
Well, it was up, right. I mean, we were up over 0.6 and maybe pushing 0.7, I think, at the high. So
okay.
Can we look at the EQs on Market Smith?
Sure.
So we don't, we don't predict, but we try to interpret. And that right now, just the high of Friday and the low of Monday, that zone is pretty much probably going to be our trading zone for a few weeks. That would be normal action. So the fact that we're backing off here, even if we were down today, I don't think is necessarily bad, as long as it doesn't do anything abnormal. Abnormal would actually be going straight into new highs or straight back down into new lows, and both would be concerning. But marking some time in here and just reacting to earnings season, I think, is what you should expect.
Yeah, that's a good point, because we want to see big gains every day, but the problem is, if that happens, then we're going to be back in the problem that we had before, where we're going to be breaking above the channel line, and then that's when the market looks for a trigger. So this past week it was coronavirus. There's always something that to scare people.
So we're kind of at the top of the original channel line. It just depends on how you draw it, but we're kind of at that point where it would be nice if we kind of just reestablish that channel that goes along with the bottom channel that you can't really draw on the Qs, but you can draw on the NASDAQ itself, just because you have that bad spike in there. But DT has come all the way back in, so that is pretty much its character. So at this point, I wanted a better price to buy some, but not this good. Not this good of a
price like this. Okay.
Yeah.
So let's keep moving. There was a question early on about EPRT, and this is one of the best REITs out there. And I've got to shake off my my initial negative reaction whenever a REIT comes up on a screen. It's
starting to come around to them.
I'm glad you mentioned that. I had so many REITs coming through my screens over the last few weeks. I mean, there's a lot of good looking REITs out there.
Yeah, this is one of the best performing stocks last year. I mean, it came up, I think we talked about it at the level 4.
The REITs love low interest rates.
Yeah,
that's the REITs love low interest rates. So
that's all you need to know about the fundamentals. Exactly.
Yeah,
low rates. Yeah, good for real estate. Good for real estate REITs. And just as Ken pointed out, this one and a few others on IBD 50, they've been like a fixture for many months.
Yeah.
See, if you didn't know, the Hat Man went to Harvard, and when the Hat Man comes out with something as basic as that, then that's all you really need to know.
I was just trying to be like that pithy PM. You know who I'm talking about, the pithy PM.
I have no idea.
I will say there's a couple things. It's more than just interest rates, because there's tons of REITs and a lot of them don't do anything. They're but in this one, and I think you can analyze these very similar to how regular stocks. So when it first broke out of this base here, that RS line was it was soaring compared to the rest of the market. And then it confirmed it on this breakout. And on this one, it's close, but it's lagging a little bit.
Chris Gessel coming around to REITs.
I know. But,
oh my God.
If we're,
is there a lightning bolt coming?
Well, and this is a second straight day of talking about REITs. The one before that was the IIPR,
right?
Which we've highlighted in the cannabis area. That's actually getting off the mat a lot quicker than the Tilrays and cannabis.
So, when marijuana stocks were just getting pummeled. This thing was breaking out over and over, and the RS line in all these breakouts, every single one of them was at a new high. Again, it was showing real leadership, and I mean, I think that's the biggest challenge is you have these general outlooks like I don't like big banks, and typically that works well for me. And there's so many times where you look at a REIT and it really doesn't do much, but there are these few that I think when you've got an RS line that's confirming the breakout, maybe we need to take a closer look at them.
I think so. Yeah. And they're kind of like not this one because this is a pot related one, but a lot of them are kind of trade like a long-term leader that we've been talking about.
That's true. Let's go to AMD because there's lots of questions about that one. And so, had earnings correct?
Yeah.
Okay. And I mean, 300%. So it was the
it was the guidance, right?
It was revenue guidance. It was a good earnings and sales beat, but their Q1 revenue guidance was a little soft. Here they were talking about kind of waning demand for video game consoles. A lot of video game makers are going to be launching new consoles soon, but demand has kind of softened ahead of the launch of new consoles.
I'm backing away. I've got a position and I sold half of it today just because it looks like it's a magnet for the 50-day. And when you have disappointing numbers like that, it's it's probably going to be dead money for a bit. And so I'd rather move that money into something else that's working. But I'm trying to hold some of that because I've got some low cost basis, but it's back to a tiny position.
Right. Well, we made the decision on Leaderboard not to remove it the other day, even when it had this outside day on Friday, right?
I thought we cut it by half, didn't we? Or let me double check.
No, NVIDIA, we went from a full to a half.
Yeah.
On that day, but
just can you tell us if we?
I'm pretty sure AMD is still a half position.
Yeah. So we didn't want to go to a quarter. So
we talked about it.
Oh, we talked about it.
Yeah, we talked about it. That's what you're remembering. We had that lengthy discussion.
I think part of the discussion, was justified in holding it because we had that big gain from the Leaderboard entry point,
and it's a leader. It is one of those ones that you can look at and say, like Apple is a leader. You try to just be a little bit more patient.
I think we decided just to see what a test of the 50-day or the 10-week moving average looks like. So
that's what it's really coming down to is, we'll most likely we'll be looking at this Friday afternoon and making a call probably around a half hour or half hour before the market closes and see what it's looking like.
I was going to say, speaking of another stock we were going to be checking in at the end of the week on Leaderboard that is showing actually very compelling price action today is ASML. This is a stock that was kind of closed below the 50-day moving average on Monday.
Great point.
Yep. And it was down and lagged while all the other chip stocks on Leaderboard Monday kind of turned higher and finished near the session highs, and ASML did not and closed below the 50-day. But look at the volume yesterday.
Yeah, huge.
On Tuesday when it reclaimed the 50-day moving average, good conviction move and a nice gap up today. Now, I don't know, Ed, I don't think ASML is an Apple supplier.
No,
not directly, no.
Yeah, but
they're supplying to chip makers.
Yeah,
with these super expensive ULEV machines.
And I, this is a great example of why we're really focused on the 10-week moving average, because there was a lot of discussion like, oh, looks terrible. Why don't we just get rid of it? And it was like, let's just hold on. And we can, and we did take it. We did take it down.
We took it to a quarter actually on Monday. So, from a half to a quarter.
Right, but we did not blow it out entirely because we wanted to see how it closed, and maybe we'll add that, especially on if it holds the 10-week, that would be reason enough to re-add the quarter that we took off.
And I think at one point we actually had it as a full, because didn't we have an option
Oh,
on
yeah,
it way back when. And
yes.
The other thing about it, if you go to the daily chart, since it's an ADR, it does kind of gap around a bit, but it is very small moves. Like if you look at the average true range, like the distance that it travels on any given day, it is not what you think of when you think of a semiconductor. It's more like Costco, believe it or not, as far as the moves. So that I think that's helpful.
See, to ASML, we can check that. The average true range. Let me just switch to a different chart real quick. Yeah, so it's essentially $5, but $5 on 300. So, what percentage is that?
Well, I didn't go to Harvard, so I can't
like one and a half.
Yeah. And what about Costco? I mean, I'm sure Costco is slower.
Yeah, but that's a good way to understand how volatile a stock is.
Yeah.
Meanwhile, the major stock indexes continue to bleed pretty badly here. The Nasdaq's almost flat.
Right.
And again, that's not a bad thing, I don't think.
No,
it really.
Actually, let's take a look and see, is there volume behind it? Let's go to the.
So we just hit 10 a.m. Eastern. I wonder whether was there an economic data that hit the wires?
Ed says home sales down 4.9%. Okay.
Let's look on our calendar here.
So we got a little bit of volume there. Now, what's interesting? There was a question asking about distribution days, and we definitely still track distribution days. But I got to say, they don't have the predictive power that they once did, where when you got 4 or 5, man, the thing, even 6, they would start rolling over right away. And it definitely plays into our outlook, but I got to say it's more the technical action than the distribution days, because we've seen plenty of times where there's been like 8 or 9 and the market just keeps chugging up or sideways. It does not roll over, and that really seemed to change after the 2008-2009 big bear market. So the thing that we've come up with in the last couple of years to kind of understand when a market is really ready to fall is the vertical violation, and that's when you get repeated heavy selling within usually 5 days. One of those might be like a really bad sell-off of like 3% or something like that, and so that has turned out to be a better, in recent years, a better predictor of a correction rather than just looking at the distribution days. So
yeah, and the distribution, like you said, I think it was after 2009 that things changed quite a bit, and it was like 2 summers ago that we were at 9-10 days of distribution holding in there. I think it was right around when we were having the missiles from North Korea go over Japan, so whatever time that was. And just looking at distribution the way we always do, it's just a down day of 0.2 or more on increased volume. And that just doesn't, it seems to be too basic of a thing to work. And yeah, I think the vertical violation that you and Justin came up with is great. And then I use the 21 day. And
right, the 21 day is another good indicator.
Although, when the market eventually does come in 5 or 5 or 10%. I think I was talking to you about this recently. It's likely that you will see, you will see signs of institutional selling, distribution days, whether it's stalling action or higher volume declines. I mean, you will see that ahead of market pullbacks for sure.
But we've just seen a lot of instances where the distribution day has been
7
high,
or 8,
and the market just
and we're only 2 or 3% off highs when it's happening.
Yeah.
So
I think at some point we actually counted 8 or even 9 distributions in our market pulse table, which is always part of the big picture. And we certainly got a lot of feedback and scratching heads from readers on that. But just like what everyone's saying, it's just like Chris, you're talking about that vertical violation. That's a very critical point. It's the quality of the distribution. It's the spirit of the law. Is the distribution day meeting the spirit of the law as well as the letter of the law? That's what you have to sort of understand, and that's why there's an art to understanding that inflection point.
Yeah, and I think that time was probably August or September of 2017. That the distribution days
was very elevated.
Were that high, and
I keep my own little record. I can go back and take a look.
Okay,
so
right.
Yeah, let's check.
Well, let's jump back into stocks. And Kelvin Crawford was asking about BABA. He had sold half, and is now that it's retaken the 50-day, wondering whether it's a good point to get back in. We did put this on Swing Trader yesterday. Looked like a good idea at the time. Now, not so much, but we'll see.
It's too early to tell.
Yeah, right.
I agree with Mike. I think the fact that it muscled back above the 50-day moving average just one day after closing below it, in my experience, that's a bullish move. I mean, it could have easily just kept going below the 50-day.
So the first area where we would probably be trimming is if it closes below yesterday's low. Yeah. And I'm not sure if we'd wait until we got all the way down to 200, but I mean, that's what we're
And that's because as a swing trader, so we're going into it with an expectation for a short period of time, a short gain, short period of time. Whereas if we would have put that on a leaderboard, we'd give it more space and more room because we'd be expecting a bigger gain or hoping for a bigger gain.
Right. And if I were buying this, I've got these shares, and I'm not. I too took half off when the market was really selling off with the idea, like, I had no idea if this whole coronavirus thing was really going to become a huge weight on the market, or was this just
Great point. Yeah, I did the same as you, Chris. I had large positions in a lot of different accounts, and when these headlines hit, I weighed the size of my positions with the gain paper-wise in these stocks, and I figured, well, I really don't want to give up more than half of the current gain I have. So why don't I just take some, feel good about that, and also be able to sit with the remaining shares if it does get support at the 10-week line.
Right. So that's where I'm looking right now. Is we've got this battle right around the line, and we'll see. We got another.
In fact, I would actually be I would be aggressive enough to buy back shares if the sort of mood of the market changes regarding coronavirus, and other Chinese stocks start to show some strength again, and I see good earnings around this e-commerce and internet content space. And in some ways, when you're fearful, it's actually a good time to be greedy.
Yeah,
so.
exactly. Right.
And I just want to address a question from Michael Lane, who asked, based off our distribution discussion, is Market School something that Justin, Charles, and I did like 9 years ago? If it's still valid, it absolutely is. And we had a lot of rules in there to adjust for when distribution wasn't working. In fact, we had Market School 2.0, which we had a separate set of rules involved with the 21-day that basically said every 5 days where our low was above the 21-day, we were going to have another buy signal. And that was to counteract when you had high distribution that was causing sell signals, but the market wasn't listening to it. So yeah, we built that into it. So yeah, I think I'm super proud of what the three of us did with Market School. It was kind of amazing.
Hey guys, I just want to highlight that pending home sales data Ed pointed out. It is on our economic calendar at i.com, and it was a really bad miss. I think maybe it really did affect the market because December pending home sales were down 4.9%. The estimate on Econoday was up 0.4%, and quite a stunning reversal from a 1.2% increase for November. So it seemed to be timed with this pullback a little bit. And also, Ed was noting that British Airways is halting all flights to China.
Okay.
Can we circle back to Tandem and Pod, because the Tandem breakout really is taking at this point. So
nice.
Yeah.
Let's go to
and
it's got some serious volume. As
Pod is up 1.6%. I'm glad you pointed that out. Absolutely.
Yeah, I've been adding to both of these this morning.
And this at a time where just about every stock out there is near its session low, with the Nasdaq now negative.
Yeah.
What's nice about Tandem is it's still early in the day, but we're seeing 300% volume. That will probably end up at probably around 100% by the end of the day, something like that. So that's nice to see, because we've had so many of these breakouts, especially both with Pod and Dexcom, where there wasn't a whole lot of volume, and when they were clearing their buy points.
The real volume is 159 right now.
Okay, so that's
that's
so
solid volume.
So Tandem, that's definitely a mark in its favor. In fact, that RS line is not too far off the high there of the space.
And this has been so choppy.
Mm-hmm.
Each one of these bases, I think I tried every single one of them. So I'm, I guess I haven't learned my lesson, because I'm trying this one.
You're almost ready to throw in the towel, Mike, but then
I don't throw in the towel. I really don't.
Yeah. No. I said almost. I didn't say you would.
Yeah. Well, sometimes I should, but I don't. Keep beating my head against the wall, man.
Well, was there a headline? I'm looking for any.
This base here was only 20%, so that's not too bad.
So they're going to report Q4 and full year results on February 24th. So that's more, less than a month away. That's still a lot of time. For some good action here. Mm-hmm. And earlier in the month, they had announced a commercial launch of a new Slim X2 insulin pump with Control IQ technology in the U.S. So that sounds like a good piece of news here.
All these companies, they just keep on, reinventing their last one, making it better, kind of like an iPhone.
Yeah, that's right.
And speaking of iPhones, have we talked about Apple yet? Did we go to the Apple chart?
No, I just brought up Avalara, because a lot of people were asking about that, and then we'll hit Apple. So we'll do the A's. How's that?
There we go.
So
Anaplan?
There you go.
Come on, you want to sing it.
I know.
Adobe?
Yeah. So this is in
AAXN.
Enterprise Software Group. A stock that last year had a nice move coming off this, bottoming area after coming public. So it can put together a nice run. Again, the thing that probably is, while the market's been running, it's been consolidating, although it's starting to move a little higher right now.
I really like the shakeout in the handle. If we go to the daily real quick. Justin and I were talking about this one yesterday. Like that's a classic. If you want to know what a good handle should look like, is having that. So you have fear in there, meaning that it came down. Of course, the whole market was coming down, but this was one of those ones that closed near the top, like we were talking about the other day, of the market giving a tell of which ones on the bad day end up being able to come back and close near the highs. But it's another one of these ones without earnings, so you can't have too many of those in your account, because that's a little spooky.
Right. And the sales are, they're moving at a 40% clip, and definitely over 100 million. I mean, it was 98 million just in the latest quarter, but
really just a good example of what a classic cup with handle base looks like too. So we call it a Shreve special, just a very clear. There's only one buy point on this chart right now. It's 10 cents above the high point in the handle, but
I agree 100%, 110% with Ken. Yeah, exactly. I mean,
that's not Ken, by the way. That is Eagle Eyes. When he talks like this, it's Eagle Eyes.
Well, what's the correction within the cup?
32%.
32, right? So that's just
Chris is kind of
yeah. But after a stock tripling in price, I'm down with that. Okay. Actually, I think you got support at the 200-day moving average. That's typical for stocks that have a huge run. Look at that run. 30 to 90. It's very possible for a stock to correct 40% or even 50% sometimes. So to me, 32%, that falls within our maximum range.
And a nice dry up in volume. Sometimes handles can correct, they can show some heavy volume, and not in this case. This was just a nice pullback in light volume. And as Mike noted, a good little support day on Monday when it.
And how deep is the handle? I know you know it.
Yeah. And
no, you're going to tell me right now. You're going to tell me 10%.
9 or 10%.
10%.
Yeah,
all right, let's jump to Apple, because
A-themed stocks.
Yeah, we'll continue the A train. So this is we had been looking at the channel, and we decided to take half of our position off on Apple in this area here, and it's continued to move higher. So that's okay. We're happy to do that. Like the market, it's at the low of its range, although it hasn't filled the gap yet. To me, this is not actionable
at all.
Yeah, it's if you've got it, it's great. But I would wait for a pullback, or at least a sideways consolidation.
Yeah,
like a little flat base, 3 weeks tight, something like that.
I think Jim Cramer is pretty much right on with this one. I love that guy. That you just hold this one of any stock, given enough time. But we don't do things that way. But
except with our long-term leaders.
Yeah. Well, I have an account that I kind of do with my parents, or did way back when, and we just left the Apple in there for years. But I haven't traded this in a while, and I've been kicking myself. I'm looking for an entry, and this is not it, because, like you said, you're already extended. Now you're up here in kind of nosebleed territory, and we need some sort of buy. A proper buy entry, and this isn't it. So a 3 weeks tight would be nice if we could get that. A flat base would be ideal, or even a pullback into the 50-day or 10-week line. But we don't have any of those. No reason to sell any, but certainly no logical reason to buy any here.
Okay, so we'll leave the A train, and now I tried to do it, but I wanted it. So early on, you were talking about GE.
Look at that monthly chart. It's a thing of beauty.
The monthly chart?
Respect.
Because this has been a leader for...
Yeah, exactly.
People just listening, they're going to be like, I thought GE was bad. Yeah, no, it's been horrible forever. And I've been poking fun of people that have been looking at this stock.
But, you got to be relieved about the fact that GE is now trying to participate in the rally, because it's still a bellwether for the economy.
Yeah,
they've really struggled because of the energy industry and the ability not to pivot to more high growth industries. That the 50% earnings per share increase is definitely boosted by the fact, Mike, that earnings were down 67% in the year ago quarter, right? So if you can't grow, your earnings after your earnings fell 67%, it's almost a lost cause. But what's also interesting, guys and ladies, that the revenue actually had dropped only 1%, which doesn't sound great, from a Can Slim Prism, but that's one of the better top line results in recent quarters.
Yeah, so we were saying, on a technical basis, yeah, you can trade this, but to me, it's a big giant company that's struggling, and yeah, there are profits you could capture, but I guess I'm just not very interested in trading something like this.
Look, I'm not gonna trade it, but I do think it's good for the market, and there are a lot of funds in there that have this. This is just an overall. It's nice to see stocks that had turned into pieces of junk, that are big and important to the country in a lot of ways, more just because of, GE's been at one point was this very important company, that to see it come back rather than, it could have gone to zero, and that would have been just sad, given its history.
GE, real quick, is tracked in the diversified operations industry group, and I don't know that there was a company that was ever more diversified than GE. But part of the reason the stock's been rallying is that it's been shedding assets, becoming more focused on areas of profitability. So that's why the market is encouraged here. They're just becoming more lean and mean and more efficient. But this company had so many tentacles at one point, and they've
and if you look at Contra's holdings, which Contra, Fidelity Contra, one of the best funds out there, this is actually a relatively high holding for them.
Yeah,
so
they're looking at it as a turnaround, and
yeah.
you see that in the annual earnings estimates here too. So, good price action today.
So we can move on from this.
Yeah, right. That's enough. Team. There were some questions early on about Team, and it's been poking above.
What would you do with this, Dave?
Well, I am looking to re-enter this stock. I wanted to see how the stock would act after that breakaway gap. I was a little concerned by the fact that one of their key people is leaving the company. So I thought, oh, well, is this going to be a downer for the stock? But evidently, is so far so good. Really impressed by their report. They really beat estimates. And another concern would be, well, the RS line hasn't hit new highs within the base, but it's moving in the right direction. Also, I guess what's interesting here too is you look on that Marcus Smith chart there that it seems like in one way it's just entering that buy zone, whereas I'm looking at 140.59 really as a true buy point. I like to find those handles that whether you see it on the daily chart or you see it on the weekly chart, a handle's a handle. So this was a really good handle, a Shreve special. I really believe that 140.59, which would mean that the 5% buy zone would go up to 147.62. So from that buy point, a little bit extended, but at the same time, 150 is definitely critical.
Well, right. So it's when you look at the weekly chart, it's hard to see the stock as being extended right now. I mean, it is. It did. The handle entry was definitely valid. It's past that 5% buy zone. But when you look at the weekly chart as a whole, it still looks to me, it doesn't look extended, put it that way.
Yeah. And then just one final thought, guys, what get your thought, Mike and Chris, the fact that Paycom, Adobe, ServiceNow, Paylocity, all those are all acting well. So why cannot, a name like Atlassian Team do well? So PCTY, ADBE, and NOW, they're all also still acting like true leaders. It's like deja vu early 2019.
They are. That group is hot again, and I completely agree that that's really your buy point. That 140.5 is your entry, and when you have these gap ups on earnings, like right now, that's really your entry where you've gone sideways. I was hoping it was going to go sideways for a little bit longer before it poked into new highs, but the way I look at this is a prior resistance after the gap, and right now the only resistance was the high of the gap up day. So I would say this is where, if you're going to nibble, this is where you start. What do you think, Chris?
I mean,
you just don't like the RS, right?
Yeah, I don't like the RS, so I wouldn't be buying it. I've really just reviewing my portfolio, reviewing the stocks that I didn't buy that I should have bought. This is, to me, once you get your universe of good stocks, like from the Growth 250, the IBD 50, sector leaders, all that kind of stuff, this is the way to refine it. And
the long-term leaders.
Yeah, long-term leaders too. So that's what I just, I didn't touch it because of that. So
there's 5,000 other stocks you can pick from.
That's right. Exactly. Right. So
plenty of fish.
But you know what? While we're on the teas, I feel like now we're Sesame Street. Let's go to Tesla, and
it's a good way to organize everything.
Yeah, let's.
Xiaolin is saying
we're going to end when we do Zoom video. And
I always wondered whether Alibaba was named Alibaba because it starts with A, with Apple and Amazon and so forth. Whether that it figured into the calculus, so to speak, for Jack Ma.
Yeah, just wondering. Kind of a smart dude.
Just wondering.
So Xiao is asking about Tesla, and assuming you bought it on the breakout and it's up 20%, along the way, what would you do? How would you manage it? Especially, are earnings coming up on this?
Tonight.
Oh, okay.
Yep.
I thought so. So many things, whatever.
Yeah.
That's why I have all you guys.
That's my favorite Chris thing is whatever. He's the most mellow dude I have ever met. It's just like, oh, well, a hurricane is coming on top of an earthquake and a tsunami. Whatever.
That is very true.
I got my pickup truck. I can handle it.
Mike, that's so true, because one day during the one of these forest fires, Chris was telling us a story about how he was going on a dirt road on his truck and seeing the fires coming the opposite way. He said, "Oh, I think I should turn around." And it's like,
whatever.
I did continue. Oh no, I think I did turn around, but they were, because a guy coming up the canyon said, to kind of rolled down his window and he's like, "The fire's coming." Maybe I'll turn around.
I would say my personality is kind of just like yours.
Everyone, the indexes have turned back higher, not by very much, but the Dow up almost 0.3, the Nasdaq up 4 points, and the S&P up a smidge.
Well, we didn't address the Tesla. I have a position in it. I haven't been selling any. I'm not going to sell any until we break the 10-week in a decisive manner. At least that's my goal at this point, and that's why I did that homework assignment that I gave on Twitter this weekend of going through Taser, which is now AAXN, back in the 03-04 time frame. And so I am expecting a very, very wild ride, and with the shorts being very heavy in this one, I mean, they're going to do everything they can to push this thing down, and I'm going to do everything I can to stay sane. And so what I might have to do is sell off other risky stocks to try to hold this position. So that's my approach. Is Bill just had this way of finding the leader and piling into it and holding it, and so that's what I'm trying to do. And so we'll see how it plays out. And I wouldn't be surprised to see it gap down to 500 tomorrow or gap up to 610. It's a crapshoot going into earnings. What do you think, Chris?
Well, I think I should have bought it, but I've talked about that before, where it was on my to-do list to see how it closed that day, and then I don't know, I was stuck in a meeting and didn't do it. So that was my my big mistake. But it's early in its run. It had a great breakout. RS line looks great. This is one that I would definitely hold through earnings. It's not so extended that I would even begin to think about hedging it in some way or anything like that.
No, that's assuming that you have a low cost basis. So if someone bought it at 500 or 550, that's a completely different thing, and you shouldn't be holding through earnings.
But I'm saying if you bought here, or if you bought down here, even bought in that area and then held it to the pullback to the 21-day, you're in good stead. So
buying right helps. This was added to leaderboard when it made that decisive move over the 361.20 pivot. So just like Mike as a holder is going to let this one ride through earnings. That's the exact same strategy that that leaderboard is going to use, because of a really healthy profit cushion and a stock that's just doing nothing wrong ahead of earnings.
Since we're on the T's tandem, it is really ripping now.
Great.
Yeah,
that is great.
Oh yeah, out of the buy zone. So that's good.
And there's a lot of volume there, over 1 million shares. Market has been showing 440% above average. And just like what Chris said, you expect that volume change to probably simmer down to probably.
But it looks like it's
definitely getting stronger.
But even then, I mean,
200%.
If it ends at 400% above average, I'd be really surprised. I agree. Expect a 200%.
But a half hour ago, it was about 150, 200%.
Yeah,
it was in the 300% when we last looked at it. And Wasatch Micro, Lord Abbott, Alger, Invesco.
Definitely some good names.
There's some good names in this.
Absolutely.
So, I'm gonna guess it's gonna end the day at 275. So that's my guess. We'll see. 275 volume rate.
Oh, volume rate. Oh, okay.
Percentage, like, wow, Mike, that's
like,
kind of.
Mike has really lost his mind. Someone tell him it's a $75 stock. I mean, the volume rate. Look, I like to have fun with games like this and guess stuff. It's irrelevant. It doesn't matter.
Yeah, I agree. Looking at, let's see. Well, it's had a lot of huge volume days over the past year or so. So, why don't we say 200? Why don't we say 300%?
Do the over under. I'm saying 275. So we'll put $5 on it.
Okay. Ralph DeSimone notes that Tandem has broken above all these resistance points
of
the last year. So I think that's an excellent point. That's really, it was kind of like the same thing with Tesla when, because it had toyed with them repeatedly, and now this one's going. So.
And I have been adding to it throughout the day, so we'll see how that plays out. But I'm just trying to be transparent, not telling anyone to do anything at all.
Right. And now, the RS line is confirming.
So we got to have another T. Do we have any other T's we can talk about, or should we move to a different letter?
Yeah, no, we'll kind of make a shortcut. We'll go to DT.
Oh,
and just check in on this again.
Yeah,
so it's still
good choice.
Still up 6.5%, but in the lower part of its range. So that's not doesn't look great, but kind of in character with the stock. There's also a question about Now, which has got earnings coming up. Is that after the close? Right.
After the close, yeah.
And what would you do with that one? So it just recently moved above this conventional buy point. Had we been looking at a lower buy point, like down in here, there's a handle area
yeah, this is the one that we've talked about with the shakeout +3.
Oh, okay.
Did we go over that again, or we did that? Someone did that.
But it was a trend. It was a trend line. If you draw a trend line starting from 3037, there you go.
You can do that too.
We actually got in before it cleared the 284.30 pivot.
Okay.
Another stock that's not doing anything wrong. Nice profit cushion. Just going to let this one ride and see what earnings look like, but expecting really, strong numbers from ServiceNow.
But if you bought there, now you don't really, you've got a few percentage points of cushion.
At 303?
Yeah. So
that's a different story.
Like I have a token position, kind of like what you were saying with your DT, because this is more of like a quality stock. And I'm expecting that, if it were to miss, you're looking at like a 15% downside on earnings, but it just doesn't, it feels like it's under accumulation. I think this base is not your typical type of, base, but look at the prior ones. The last big base that it came out of kind of looked similar to this. It was
more actually looked worse.
Yeah. But the RS line looked better at that time.
Yeah,
that's the difference. But we were going in a bear market. We were, experiencing a bear market that was fourth quarter of last year or the prior year, 18. Now we've been in this uptrend, and the entire group has just been out of favor, except for like what Dave was mentioning. They're all coming back. You can almost just play the IGV, which is something Justin, Chris, and I were talking about yesterday for Swing Trader, but it just didn't have a clean entry point to put on there. But if you want exposure to this space, this is one of the things I'm thinking about doing, is just buying some IGV, and it's pretty diversified. You've got slower stuff like Adobe in there.
And CRM, things like that.
Yeah.
Okay. Any last stocks that we should take a look at? Sukumar is saying Luckin, so why don't we check that, because it'd be interesting to see what the other Chinese stocks are doing, especially. So this one's down a little bit today, not terrible. Still, in that battle over the 10-week moving average and the 50 days. So it's holding support at the 10 week, so that's good.
What I would suggest people do after the call is just play through the entire industry group of the ServiceNows, the Shopify's, and look for other stocks. We just don't have time to do it today. Maybe we can do it tomorrow.
Okay.
For a steep a slope, that 10-week moving average, Chris, on LK Luckin Coffee, that's an impressive bounce off the 10-week line. I have to say, amid all the fear about coronavirus, the fact that Starbucks is closing a lot of stores, Wuhan is basically a ghost town right now. Wuhan being the 6th largest city in China. Did you know that? That's really surprising. Top 10 city. To me, if you got a big profit cushion in this one, I'd be a holder.
Would you be a buyer? Would you maybe size a position off the 10-week and try to take advantage of this?
I would certainly do that. My views have changed. Actually, my views have changed on Luckin after I'll say once again, disparaged that bucket base that came out. But I think I ignored the fact that the weekly volume was just incredible, ginormous on that breakout week, and you've got a big profit from that buy point in the mid to high 20s. So obviously higher risk, higher beta, small cap, new emerging market, but maybe worth the reward here.
I will say, I just was running the numbers. So on a $100,000 portfolio, if you want to risk $1,000 or 1%, and it's 4.5% off the 10-week, that would give you a $22,000 position, which to me is too big for something like this. So you cut it at half. You're only risking 5.
Yeah,
that's actually a pretty good risk reward. And
if you want, you could even cut it more than that.
Yeah, sure. Cut it to 5 and just see how it works, and then if it makes a new high or makes a true base, then you make it a full position or whatever your position size is. But that's
great strategy. I agree.
Yeah. I might even consider that.
I think I was also a little bit critical overall the overall picture back in November, because I'm looking at the estimate for 2019 was a loss of $1.41 a share. It's like I can't really buy those kind of companies. It's just not my DNA. But the sales growth is just absolutely explosive. I mean, 517% sales growth in Q3, record for a quarter, 216 million. You got to think, well, there's probably a lot of faith that they will become profitable and they have good cash flow.
Well, there's something I wanted to say on it. On the sales number is always nice when they're so big that it's 9999. We didn't have the fourth digit. If you can kind of point to where that is, but on the weekly chart itself, can we do a track price? I think we have the closing range on there as well, and so that's 53%. So an old bill thing was on a weekly basis 40% or higher with a pickup in volume. So we'll have to see how the volume is by the end of this week. That's what he called heavy volume without further price progress on the downside. So heavy, a bunch of words. So it's just supporting action is what I'd like to say. He would always write it out with the initials, heavy volume without further price progress on the downside. And so a 40% closing range or higher with a pickup in volume when it's coming down, so supporting action. So right now, it's even better than that. So from a weekly standpoint, and this being the first pullback to a 10-week line, I think the more I look at it, kind of like you guys, the more interested I am in it.
Totally.
And let's go to the daily real quick.
And my last comment is going to be regarding the 50, the daily chart too. So go for it, Mike.
Sure.
And I want to see what you think.
So think about it. This is a high flyer stock with no earnings, and the sponsorship isn't really that great, and has had this massive move. And then you have the coronavirus going on in his home country. And you would think if this was a complete piece of junk, it would be 50% off its highs at this point. Right. And the fact that it's only 25%, it hasn't even touched its 50-day, that is a sign of strength. Now, I like to buy on strength, so I would wait for it to be over 40 to pay up for it. So that might be a few more days from now. But like what Chris was saying, I'm going to have a tiny, tiny, tiny position because of all the risks that we were talking about. But what were you saying, Dave?
I'm you know what? I just want to echo what you're saying about the action near the 50-day. Hasn't touched the 50-day since the breakout. There's another stock from China that's done exactly the same, and that's GSX Tech Edu. GSX, after its breakout, it kind of futzed around a little bit after a move, but then the powerful volume came out, and then look at that move. The 50-day can't even see where the stock is.
Yeah, that's true. Wow, that's really
kind of
impressive.
A little too slow for me. Find something faster.
Okay,
are you looking at GE? I think
really
you're looking at the
over
GA chart, not GSX.
Yeah.
I'll shut up.
There is a question from James Berry saying with the news on the housing starts, would this be a place to take profits on nail, especially if you bought right here? It's almost up 20% in or it had hit that 20%.
It did hit that mint green strip. Yep.
Yeah. So if I were holding it, I probably would. It all depends on how did you enter the trade. Did you enter it as a swing trade or as a position trade? And it makes sense to take some money off the table, especially when you're getting bad news like this. But boy, it did go. Yeah, it hit 21% very quickly.
But that is a triple, so it's not the fact that it's 20%. I have it. It's not a massive position, but I want some diversification and some of my money in this space because it looks like it's the beginning of a move. And if you look back to that move that it had in 17. That was pretty, that was a pretty massive, like a lot of things at that point. So yeah, am I happy that it's down today? No, but at this point, it hasn't done anything wrong where I'm backing away. But again, it's not a big position now. If I had an oversized position, I'd probably be trimming because it looks like it could be dead money for a little bit.
Okay, it's already 40 minutes past the hour, so we're going over again. Really not a lot of time for a roundup, but we hit a lot of stocks today, and some actionable, Tandem being probably the most impressive thing right now. So we'll take a look at that. That's pulled back a little bit, actually back into the buy range. Yeah. That might be another one that I take a nibble on because I've got the other two stocks, but the fact that this is so powerful and it's been breaking out of this long consolidation and that RS line, it's essentially confirming the breakout. So that's okay. I guess with that, if you've got more questions for us, I know that Justin is knocked out. Almost 70.
69, wow.
Yeah. So reach out to us on Twitter. We'll have the Q&A on the IBD Live recap and as well as our ready list and our watch list. So we'll be back tomorrow. Have a great trading day, and we'll see you soon. Okay. Bye-bye, everyone.
Bye-bye.